Hello fellow chartists, welcome to my YouTube channel. I am the Chartist. Today's a Sunday morning and I wanted to do some technical analysis to help get us ready for the upcoming week. Okay, so all week last week, all week, the week before that, and the week before that, we have been making a shit ton of money. Alright, that's good. If you've been bullish, you've been making a shit ton of money. If you've been bearish, trying to call a top in this bull market, you probably haven't been making money, okay? However, we had a 470 price target. We hit that. It went just a little bit above 470.5. Got a nice pullback all the way down to 466. I told you guys that, and I said to the bears as well, okay? Because the bears think I'm always dissing them, but I'm actually looking out for all of us. I told the bears, and of course my fellow scalpers, that if you're gonna short this market, you want to short around 470. Okay, so from 470 drop all the way down to 466. So if you did that, hopefully you took profits. Okay, you should have made some good money. Okay, that's the point here. Okay, so what can we expect with this week coming up? Okay, will the market finally get the pullback? It's best not to try to claim the pullback is here or anything like that. That's not what I'm gonna do. But I am gonna talk about the price action and what we need to watch out for. Of course, in a strong bull market, we want to see constant bounces off the 5-day moving average. Just like in a strong bear market, we want to see constant rejections from the 5-day moving average. The 5-day moving average on the daily chart, that's the red line right here, okay? Not no 5 minute, not no 1 minute, 2 minute. All right, daily chart, guys. The daily chart. That's what I'm showing you guys right now. SPY daily chart. Okay, so right now, this is from the previous week's moving average, and it was at 464.4. With this week coming up, it's probably going to move up a little bit higher to 465, around there, okay? So I'm going to be watching the 5-day moving average and how the price action treats it, okay? So anywhere from 464.5, maybe down to 463.5, because you know sometimes the market makers like to push it down just a little bit to try to trick us out, okay? As long as those levels hold, I'm going to remain bullish. That is where I will be looking for more buying opportunities, okay? If we get multiple closes under the 5-day moving average, that is a sign that we're going to get a deeper pullback. As you can see here, look at this one. This is back in September. We can learn from previous price action, okay? Because one close below 5-day moving average is not enough. Like right here, there was one close and the next day, boom, boom, boom. But here we got one close under the 5-day moving average. Got a second close. 2 days to 3 days of close under a critical support level is a sign that we're going to get a deeper sell-off. Okay, you can even look here. This was back in July. We had broke under 5. And this one actually broke under the 13 and it closed under it. That's multiple days. That tells us right there. Also, that was an outside day candle, a bearish outside day candle. That tells us right there that will be more of a deeper correction or a deeper sell-off. Okay, right now, SPY is trading above all moving average. So this is still a very strong bull market that you don't want to short just yet. Okay, but if you did short it, short from resistance like we did last week, and be ready to take profits quick, okay? But if we see SPY trading under 464.4 and is closing multiple days under the 5-day moving average this coming up week, that's a sign that we could sell off further down to one of our other support levels we have here at 458. 453. Now 453 is interesting. Not only is it the 20-day moving average, but if we check the weekly, this is the weekly, is also where the 5-week moving average is. Okay, and it's very critical that it holds. It's at 453 right now. Keep in mind, on the weekly chart, SPY is trading very far outside the upper Bollinger Band. When the new week starts, upper Bollinger Band will move up just a little bit, but it's still a little overextended on the weekly chart. On the daily chart, it's not quite overextended. It looks like there's more upside, okay? But we're going to let the price action guide us. What does that mean? It means you watch support level. You don't watch it, and you watch support level, that's where you want to enter, but you also watch it as an equilibrium. Meaning, if it gets broken, one close below is not enough. We need at least two or more. If our equilibrium level gets broken, two closes or more, that's a sign that we got to start focus on the next support level. You guys understand that? That's what I mean by let the price action guide you. Don't just try to short this market because SPY made a new all-time high or it's been going up. Listen, the market's always right and it doesn't have to make sense. Yes, it is a manipulated market. Okay, guys? So follow the smart money. This is manipulated. But when you learn how to read charts and allow the price action to guide you while managing your risk properly, you can find ways to follow the smart money, which is what we've been doing, which is what I try to show you how to do every single one of my videos. Okay? So, like I said, don't try to trade this unless you have charts. Okay? You cannot be a price action trader unless you're watching the charts like me. I use TradingView. Okay? Don't use a brokerage app. I mean, you can if you want to, but I prefer you use a brokerage app that has some charts that you can see the charts. Like Webull or Thinkorswim. Okay, those have charts that you can look at while you trade. Robinhood is not really that good. I mean, if you use Robinhood, that's fine to buy and sell your positions, but you know, try to use a chart. You go on TradingView, preferably on a desktop or a laptop or something. Webull has it, Thinkorswim, and I'm pretty sure there are other brokerages that have that as well. Okay, so don't go in blind. Don't try to guess. Okay, I'm very glad that I'm able to help you guys make money. That means a lot. Trust me, it does. But remember, I am your assistant. That's it. Nothing more, nothing less. I am not a guru. I am just your assistant. I'm here to assist you. You're the star. Make sure you are doing things properly so you can make money. Not based off of luck, but based off of skill and having the right practices. You guys understand? Okay? So, I want us to watch the 5-day moving average very carefully and see where SPY chooses to close this week. Also, this resistance level. Now, I always tell you guys to don't try to call a top in a bull market. I kind of did call a top, which is weird, right? I tell you guys to don't do something, but I do it. But the reason why I said 470 was where a good area to try to short or buy a put or whatever you do. Is because of this strong resistance level that started from here. Got a touch here. This started in July. Touch here, touch here, touch here, a touch here. False breakout here. And once again, we are here. That's why it's been over a few months since July. Okay, that's about 3-4 months that this resistance level has been working and serving as a ceiling, as a resistant level. That's why I say if you're going to short it, short from resistance. If you're going to go long at support, which I use my moving averages, especially the 5-day. And if 5-day get violated, then you can try to short it from the 5-day, because in the bear market or a bear trend, we get a lot of rejection from the 5-day moving average. Very just like the VIX, which we're gonna talk about in a few minutes. Okay. What else I want you guys to watch out for is if we get this breakout from here, because that's still a possibility. The breakout level right now is 469.7. 469.7, yeah. So if we see SPY closing around above 469.7, we're getting multiple closes above this breakout level. There's a high chance that we will go to the next resistant line. Okay, let me move the moving averages. As you can see, according to this one, this breakout, I'm gonna change it to blue. According to the blue breakout level, we got a false breakout here, and then we started heading down. But using the white line, I start from here, July, and I let it touch there, right there. Okay, you guys see that? So if we do get this breakout above the blue line or above 469.7, it has to be at least 2 closes above or more. We can go and touch 475, maybe even 477. Okay, that is the bullish scenario. All right. Now, if we do get go back and test the 5-day moving average and it successfully bounces, that keeps that 475 to 477 price target in play. Remember, my price target is not only a resistance level, but that's where we take profit. Okay? Don't let it hit the price target and then you don't take profit, guys. We're traders. That's what we do. If you're bullish, you buy around support, take profit around resistance, and we do it over and over. If you're bearish, we short at resistance, take profit at support. We do that over and over and over. Okay? So that's what I want you guys to watch for. That's my thought. Now, if the 5-day moving average does fail, the 464.4 all the way down to 463.5. If that range fails, we could possibly sell down all the way to 453. Possibly. Okay, if anything changes, I will update you guys in the next video. Okay, keep in mind that when the new week starts, this moving average will move up. So maybe not 453, maybe 454, 455, around there. And for bears or scalpers, that's a very nice move to the downside. Okay, that's a lot of money. We're talking about a lot of money if you buy puts or whatever. Okay, guys, so remember, I want you to watch it, the 5-day moving average, wherever it opens at. Please do not just go in this blind. Please get access to a chart. I use TradingView. You can use TradingView as well. You can use Webull. You can use Thinkorswim or whatever. Just anything other than a Robinhood chart. Okay, not dissing on Robinhood. They're cool. It's just their charts suck. Straight up. Okay, guys? Watch the 5-day moving average. And also watch if we get the breakout level. And if we break out again, watch if it holds. Let the price action guide you. Now let's take a look at the VIX. VIX is showing some buying pressure. Not buying pressure. It's showing some bullish momentum. Okay. So it closed for the first time in a little bit. Not too long. But it closed above the 13 and the 5-day moving average. Came and tested. It went above the 20. Came and tested the previous breakout level, the orange line. Okay. This orange line, I changed it to white. Make it a little thicker. You guys see it now, right? It started here. Got touch there, touch there, touch there. That's the breakdown. Had the retest, the false. Is the bear trap right here. Bear trap because when this goes down, the SPY goes up. So we're using this to help us trade the SPY. This is a bear trap. Came right back down. Now we got like some double bottom type stuff, okay? Now you can see that as bullish. But it came back up and touched the breakout level, or the breakdown level, excuse me. And it failed to get back above. And also it still closed below the 20-day moving average. Okay? It's possible, depending on where VIX opens and where it closes, that it can keep on going to touch the 50-day moving average. And if that happens, that means SPY is going to get a deeper sell-off down to one of our support levels. Okay? But if not, and it starts heading back down, I'm very confident that it will come down to touch the $14 level, which is our next support level, or probably touch the lower Bollinger Band. Okay? Because this could look like an inverted cup and handle. Right now we at the handle. Okay? It's not perfect like they teach us in the textbooks or whatever you learn about chart patterns and stuff from, but that's what it's at right now. Okay? So technically speaking, VIX is still looking bearish. If VIX can get back above this level, which is at 1713 or above it, it'll put the 50-day moving average, which is 1845, in play for the VIX, which means SPY would be bearish. Okay? So keep an eye on the VIX. As long as the VIX stays below the 20-day, the 20 days at 1650, if it stays below, that's look like a good sign for the SPY, for the bullish scenario. You guys understand that? Okay? So I want to take a look at the seasonality. Now somebody in the comment section the other day talking about that's not what we had in September or whatever. It don't make no sense what they were saying. But in September, let's start from March, okay? We had the March low. Please go back and check SPY earlier this year. We had the March low, and then the surge well into April. The choppiness in May. Okay, got a top in June, followed by a June low, where we got a surge in July. Choppiness in August. We got the top in September. And then we got a low in October, which was around October 11th to the 13th, and then that's when we got the surge. All right, we are around here right now. Okay, please go back and check the chart. Mind you, the seasonality is based on the last 20 years time frame right here, 20 years, and it's only based on the average for the last 20 years. So it's not going to be 100% identical to this, but we use this as an idea of where the price action direction will go. Okay, now I don't use this as my full weight or heavy weight in my decision making. I am a price action trader. I don't care about the news. I don't care about my fellow retail traders' opinion. You guys shouldn't care about my opinion either, because what I'm sharing with you is not my opinion. It's just my price action analysis based on the charts. You guys understand that? Okay? So the seasonality so far this year has been pretty spot on. Now, even though I am a number one is price action, if it's working, I'm going to continue to use it. Now, we got this big surge that was supposed to happen towards after the first week of October and surge into November. Did we get that? Right here. October 13, we got the big surge well into November. You guys see that? Now this top right here should be around November 10 to November 11, and that's when the weakness start again. Okay? But we'll see. It's not 100% accurate with the SPY, but after the first week of November, we should start seeing some weaknesses. So bears, you guys should be happy about that, because I don't know why you guys want to be bearish all the time, but if you're going to be bearish, around now is the good time for us to stop being bearish, okay? It's starting to align with seasonality, but at the end of the day, we got to let the price action confirm it. You guys understand that? Okay, guys? So stay objective with the SPY. All right, remember my scenario and remember the price action I want you guys to look for. If you need to, just please rewatch the video again, okay? I'm going to move on to triple Q. And as you see, I do the same analysis I do with triple Q with SPY, but here's the difference. Like I said, watch the 5-day moving now. 5-day moving is at 393 right now. Below 393, I'll be more bearish with triple Q, and we get more downside at 384, and the next support is at 377. Okay, those are some nice big juicy moves if you plan on buying a put this week. Okay, however, price action is still very much bullish. Okay, not only we get a breakout right here, even though we had a red day. Look at it. Even though this is a red candle, right? You're thinking, oh, it's a pullback. Not really, because it closed still above the previous day candle. So this was still an up day. It just gapped up, and then it had a red day. It came down just below the breakout level, but it closed above. So that's 2 days above the breakout level. I told you guys I had a $400 price target if you've been watching. Hopefully you guys have. But if not, I told you guys. But if you didn't, if you did, you should have made some good money, okay? But that's 2 breakout level above this breakout level, which puts my next price target around 404 to 405. And we'll see if we get a nice pullback there, okay? Of course, if this end up being a false breakout, then I'll be more bearish to the downside, 393 to 384. So like with SPY, be sure to watch the charts. Okay, guys? ARKK, we had a breakout here, and look like it's just going choppy right now, sideways price action, which is fine. It's basing. Hopefully it'll hit our next price target of 126 and then 132. Look where it bounced from. It bounced right from the breakout level. So price action is still overall bullish, but it can't go straight up like forever like what SPY is doing that right now. It's just choppy a little bit, building strength, and see if we get the next leg up. Okay, now Bitcoin, it broke out of the bull flag back in November 2nd, and it's been choppy ever since. You look at the Bollinger Band, it's just going sideways. You got the 13-day, 20-day, and the 13-day just all together just like that. All right, but it's still bouncing off of our breakout level. Okay, I will be bearish if 59.6 if we lose that. Okay, it has to be more than 1 day close, because look, it closed 1 day below it. The next day we recaptured it, and we've been bouncing off of it ever since. Okay, are we waiting to see if Bitcoin can break 63K? If Bitcoin breaks 63K, I'll be more bullish. We can go hit the next price target 67K, and then my big price target 71K. If we lose 59.6K with multiple closes below, then I will be very bearish on it. Okay, guys, so that's what I got for today. I hope you guys have a profitable week this coming week. Just be very careful. Remember to respect your stop loss, and remember to watch the price action, because the price action is king. Good luck, guys.